Welcome to PhillipCapital's Weekly Market Watch. Despite analysts saying that the market will go through a correction soon, the market has been surprisingly resilient. We have with us today Mr. James Chua, investment analyst from PhillipCapital Management, to share his views. So James, why do you think the long-awaited correction has yet to come?
Yeah, we think that the three things which could trigger the correction are firstly, the analyst consensus numbers on what earnings will look like in 2010. The first thing that we can see here is a chart of 2009 and 2010 consensus earnings. You can see here that 2010 earnings is expected to come in 40% below 08 levels, but more importantly, expectations for 2010 is gradually improving. The second reason is Chinese industrial production. As you can see here, the Chinese PMI bottomed out in October of 2008, spiked up sharply until May of 2009, and have gradually increased until today. So as long as this stays above 50, China's manufacturing sector is expanding. And lastly, one of the reasons why we think the correction has not yet arrived is because the Fed has not indicated any reason for tightening the interest rates in the US.
Seeing that interest rates play a key role in determining the directional outcome of markets, what are your views of interest rates and of the Fed tightening the interest rate cycle?
What we've seen in the past is that typically the Fed will not tighten interest rates until you see a peak in unemployment. Since 1954, we've seen 9 recessions in the US, and in every instance, the Fed does not raise the interest rate until the unemployment rate starts to come off a peak. What we've seen is that on average, the unemployment rate fell 0.7% from the peak before you see a tightening in interest rates, a raise in interest rates. We think that this could come during the second half of 2010.
You sound quite positive on markets, so how should investors position from here?
Well, based on some of the views that we've shared with you, we would generally be buyers of dips. In general, from a relative basis, we still like the story of Asia outperforming the West. Also, we would prefer buying Asian growth assets over US distressed theme assets. And actually, that's how we're positioning our portfolios at the moment.
Thank you, James. That's all we have for you today. Tune in next week for more market updates.